Hello guys, it's Max here from Daily Market Movements, and in front of me we have the S&P 500 futures chart. As you can see in today's trading session, which is the final trading session of the week here on Friday, we have fallen alongside the Dow Jones 30 and the Nasdaq 100. So we've seen a broad decline in the markets today, and this is due to the fact Joe Biden last night unrolled and announced his plans for the stimulus deal, which he hopes to put into work when he takes power of the White House next Wednesday. It's safe to say that investors weren't too impressed. That's why we're trading in the red today, and that's because there is a $15 minimum wage requirement. So, as I've just mentioned in my Nasdaq 100 video, this isn't a problem for, the likes of Apple, Google, Amazon, Netflix, as they're sitting on piles and piles of cash. However, if you're a small business which has really struggled, for the past 9 months since COVID has struck our country, then you're not really sitting on much cash at all. And of course, the government has done a really poor job at helping the small businesses, because there's been a massive debate between the Republicans and the Democrats with regards to this second stimulus deal. So the likelihood is that a lot of these businesses are really struggling when it comes to having money. And now Joe Biden's gone and slapped on a $15 minimum wage requirement per hour. So that is an additional business expense. It's going to be very expensive for these small businesses to employ people, which is a worry, and that's why investors have been treading the waters very carefully, and I haven't really put too much money to work in today's trading session. That's why we have been trading towards the downside ever so slightly. After the US markets opened, we were trading a lot lower. We did go as low as 3,760, but since then we have snapped back and pared our losses, and we now currently find ourselves trading at 3,773. Earnings season has started though, guys. Today we had JP Morgan and Citi Group who reported their earnings today. They did very well in their earnings, and their stocks were trading higher at the market open. If you've been watching my videos for some time now, you'd have heard me saying that I am anticipating blowout quarters for the majority of the big tech firms, as we've just experienced the biggest e-commercial Christmas ever. So I really am expecting good numbers from the big tech names, and Apple is the biggest stock in the S&P 500. If Apple has a good day, then it's very likely that the S&P 500 has a good day as well. So I would be a buyer of the S&P 500 going into the end of January and the beginning of February, and I am definitely a buyer of the S&P 500 going into next week. I'm looking at us to pair this week's losses. This week has been a negative week for the indices, and I will be targeting up at around 3,800 going into next Monday. So I am a short-term, medium-term, long-term buyer. Nothing has changed from that front. If anything, I'm more attracted to buying the S&P 500 this week because the RSI is now dipped below 60. So that is valuation which you kind of want to take advantage of. So I'm a buyer, no interest in selling whatsoever.